Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy nearly Friday.
Nearly Friday. Bit of a pre-record this week, but full transparency as always. But welcome everybody to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. And this week we got the second part of our Paolo Cuomo interview. I've been practicing that all week.
We still haven't got it right.
No,
Cuomo.
What did I say? I'm in my head. It's coming out.
Coo like a bird. Cuomo. Coo. And then that washing up. That washing powder. Omo. Cuomo.
Anyway, we have the second part of our interview with Paolo, which is coming up. As always, Ben, we have the news. Now, we must have started a trend off by talking about Tesla last week. We talked about Tesla's insurance product, and you gave us a bit of an overview. And then we had this coming out by Paul Cuomo, who's giving the opposite side of the argument. Why it's not going to work.
Why it's a game changer, and this week is why Tesla will flop. I mean,
yeah,
right, okay. As probably, spoiler alert, the answer is probably somewhere in the middle. But anyway, worth showing the article, because I think what this chap Paul Carroll writes about is saying that I think it's overstated that Tesla is going to change the game in insurance, and they've already not made a success of it, and Elon Musk exaggerated what he was going to be able to do, and so on and so forth. But that's, guess what? Elon Musk exaggerated. That's quite interesting. It's a statement, isn't it? I mean, nobody's heard that before. So I was going to say that what this article is mainly about, actually, and I do think I'm sure Paul Carroll doesn't listen to our show, but if he is, I'm not denigrating. I'm just saying a lot of this is, and to his own admission, is about Tesla itself as a business model and whether that's really going to suffer. And there's quite an interesting bit in the middle of this which talks about the brand of Tesla now being quite damaged, and he does quote some pretty severe drops actually across large parts, because it's a very middle class product, of course, this Tesla thing, and lots of middle class people, in liberal economies, maybe not, even in America, I'd say, are believers in climate change and things like that, and they're not pro-Trump. So hope Trump's not listening. And therefore, I think he's got a really good point about the brand of Tesla and the problems it might have in future. Now, I think there's a wider point, therefore, that if you do insurance, you need a sort of reliable, big institution almost to be there, financially rated and all that. Arguably, Tesla is big, it's massive, but is it going to be incredibly subject to volatility in terms of its commercial success? And I think that's a good point. And so he talks about also that the claims as well has been a bit overplayed. Well, he said that Tesla fudged the figures, and that actually Tesla looks like it's got one of the worst accident records, not one of the best accident records in the US. Whereas obviously Musk has said it's one of the best. So he said there's figures to prove it, and therefore he said any insurer going into this, if it doesn't have good data to start with, is going to be in trouble because the claims will be big. And obviously there are issues over claims with EVs at the moment, and you've got to believe to some extent the data isn't getting through to insurers as well as it could, which you'd think in these are kind of computers on wheels, you'd think it would be easy. But then he also draws attention to the fact of various court rulings that you can't share data of drivers, personal data willy-nilly, even for insurance. So he sets out a number of, I think, quite sensible challenges to Tesla. And he comes around in the end, though, to say, but it doesn't mean the business models, not going to not, that it's a complete failure. He said he can see why, if you can get data directly from cars on driving behaviors and so on, then you do have a handle on what the claims might look like, and therefore you've got potentially a very good product there. And obviously, I will say, having owned a Tesla for a little while now, that their technology user friendliness, if you like, is very, very high. I would put it as one of the best kind of experiences I've had. A few little quirks and bits and pieces you get, but compared with normal cars, you have to do everything on a screen and things like that. But generally speaking, I think it's pretty impressive and only going to get better. And now it doesn't, whether Tesla does that or someone else, some Chinese company does it, I don't really care. It's just progress. It's that's competition, and it probably is just going to be an absolutely massive competition to do this stuff better and better and better. But what you can say now is that what Tesla has done is it's broken ground on this. Driving this as a computer isn't like a normal computer experience where it goes wrong and you get glitches and things like that. This actually does really work pretty well. And okay, he's going to do all sorts, so he says, around robot cars and all this. And the other point is brought up about, well, yeah, that's fine, but you need geofencing and you need to do all that stuff. But we're in the early days of all this stuff, and it seems like the US and China basically see something and want to invest in all of this. They want to spend trillions of dollars on this kind of thing. So whether that's good for mankind in the end or not, it doesn't really matter. They're going to do it anyway. So I think the arms race over technology is going to mean that we're going to do this. And then coming back to insurance, seems to me the point is still there, that not just in motor or auto, you're going to have it everywhere where the actual gadgets or the things you've got could just be used as the data source for the insurance. And that's, doesn't seem to me to be completely far-fetched. And therefore, insurers will have to think this through.
Yeah.
I mean, you might argue insurers need to think all this whole new world through. That are they the right sort of, do they have a handle on what's changing in terms of what will happen with risk transfer in the future? That's kind of interesting anyway.
So I was going to kind of pick up on the point that you made around kind of brand, because, and I wonder whether we can take any lessons from kind of the Amazon experience of trying to, launch there. And you think that they would have that kind of big brand, that status.
Yeah.
But it didn't fly.
No.
And I wonder, because I wonder even, if you look at all the surveys, there is still a lack of trust with insurance companies, especially at the end that we're talking about here, kind of motor and home. But I wonder if they trust Amazon less with that kind of thing.
Well, there was a point made, I think we had someone on this show said, it's not easy to compare, one different sector with another. They all have their own quirks and foibles. And I think that's right. I think that's a very good observation. People, you said that people don't trust insurers. Well, but they buy from insurers, and they know that insurers know their stuff, right? Even if they don't like. I mean, I don't think they don't trust necessarily, because otherwise it would be a big problem for the industry. I think there's a kind of not sure whether they'll pay a claim, but I think also people probably, if you got them down to it, said, yeah, but I know they do pay out claims, and I know they, there's kind of nitpickery and all that sort of stuff that goes on, and legals and things which piss us off. But broadly speaking, the insurance industry is part of the fabric of society, and therefore is, I think people will say it's slow and all the stuff we know. But so therefore, do you kind of then, what Amazon tried to do, I think, was to say what you said, which is, yeah, it's not trusted. You need a brand like Amazon, which you can trust, and all that we have to do is put the Amazon badge on it, and then you're done. But Amazon, and I think there were articles written about this, and we commented on it, Amazon didn't try and own the ecosystem. Why Amazon works is because it owns that whole retail ecosystem. It owns the sellers, the buyers, and everybody else, and it sticks it on that really brilliant platform, and it just says, we'll deliver it quick. Anything and everything you want can be delivered quick. And that model is fantastic in that space, but they'd have to do something different. They'd have to own a lot of the insurance ecosystem, carriers, intermediaries, people like that, and say, right, okay, we'll make it all work. And that is probably the thing we bat on about in this show more than anything, which is the frictional issues between different parts of the industry and the distribution chain. That's where most of the problem lies, really.
Yeah. More on that later when we talk to Paolo. Okay, good. Let's move things on then to another article related around, I guess, costs and growth, around kind of this, I don't know, what would you call it, a tension between kind of headcount and revenue, or there are different approaches within personal lines and commercial? What would you say?
So this article is from a company that Jacobson Group that works with Aon and produces a study every 6 months about insurers' plans, basically in terms of growth versus headcount. So, are they planning to recruit? Are they planning to grow or shrink, or are they, and then relating it to whether you recruit people? And the top line is that there's a big gap between the growth expectation and the plans to recruit. In other words, they're not planning to recruit that many people, but they are planning to grow. Now, okay. So the first thing you take on that is, do insurers might also say they're planning to grow, but newsflash, there is a softening market and it's massively competitive at the moment. So that may be overstated in terms of the growth. The headcount thing is something they've seen as a trend, and it is interesting, the gap, because typically there hasn't been that gap. When revenue grows, when businesses grow, headcount grows. That's what insurers tend to do, but that's not been happening. Digging down a bit, though, this is, and it is important, there is more going on in the contraction of headcount in the personal lines space than in the commercial, and particularly the P&C commercial line space. So mostly what seems to be going on here. So the guy who runs this business or comments here says, well, I get asked a lot about whether this all is down to automation. And his answer is it might be to some extent, but it's probably not the main thing. He says he thinks it's more about the dynamics of the market. In other words, insurers pulling out of all sorts of lines and territories and regions. I think this is quite US focused. So when he talks regionally, I think he's talking about state insurance. So he's talking about Florida, he's talking about California, where obviously there have been huge numbers of insurers pulling out and losing tons of money as well. So that's what I think he's talking about. So there are just great slews of business that there are going to be there's no policies and there's no claims, so there's nothing going on. So they don't need any people. So I think that's what he's really saying, is that is probably more to do it, because most of the growth in the last few years has also been about rate growth, not organic. So they're not writing more policies for businesses or people necessarily. There's just been rate growth, and that doesn't need more people really, other than in claims perhaps. So but the one area that is growing, it's quite interesting, is, or there's a contrast really. So P&C commercial is about 67%, I think it is, saying that they are going to grow headcount in that space. So that does look like it's very people oriented still, and companies expecting that to grow more. Now I wonder whether that's related to profit or it's related to strategies, that's a great growth area for us and personal lines is a nightmare. I don't know. I think that might be true, but it is very different. I think what do you take out of this? Well, there's something going on. I mean, definitely something going on in that personal line space. It does feel to me that there might be an automation effect in the personal line space. there's no proof here in the data of this, but it does feel to me that that might be coming in to some extent. There may be more, and it's talked about in this article, there may be more technology in play. Doesn't mention it here, but there may be also be more outsourcing. They do talk about temporary staffing coming in and things like that. So there's more of a sense of insurers saying, well, we're in and out of these businesses. It's all kind of a bit of a mess. So we'll rely not on permanent headcount. We'll rely on temporary or outsourced operations. So, I think that's, when you get that sort of situation, that's what businesses do. They go, look, we're not going to recruit people to work here for 10 years because we don't know what the next 6 months is going to be like.
Yeah.
So I think all of the above, and then, but P&C looks a bit more stable. But perhaps, given yours and my interest in technology, perhaps not really saying that there's a lot of automation expected in the commercial lines space anytime soon.
And that's kind of what I was going to say as well. So I think one of the reasons that you'll probably see a rise in headcount in the commercial and especially the London market, and that particularly in delegated authority, is because a lot of the process haven't been digitized and are not and are still manual. So there is still a link between, as you grow your book of business, you just need more people to manually process and kind of get that business through the door.
Yeah.
So I think one of the challenges, especially in the London market, is as DA has grown, so rapidly over the last, whatever it is, 10 or 15 years, how do they uncouple kind of those manual processes with that growth? How do they achieve kind of the scale, I guess, that you kind of need in order to kind of grow those businesses profitably? Economies of scale. That's the
I mean, I've got some data I've seen recently from our data, which I won't reveal it too much because it's too interesting, but it needs to be thought through. But there is no doubt when you look at let's look at the London market, that there is no real clear strategy around where and how technology will help or not. And therefore, there is still a lot of very traditional ways of working, as you imply, a lot of reliance on just email versus, brilliant data trading systems or whatever. So I do, and there's still a massive debate over whether people should work from home, whether there should be personal interaction, more of this or less of that. Should you be in the office? Should you be out? I mean, I honestly think, I go back to that Steph Ogden, thing, saying it's the top of the chief exec's agenda. She said it was hybrid and all that, but I think it's more than that. It's what the hell are we going to do with people when we're in an automating world, and we don't know. We don't have a clear idea at all as to what to do with all of this. So while all these lovely tools like AI and everything else are coming out, I think the P&C market is sitting there going, I don't know where it fits strategically for us. And that's not just because one business can't work that out. I think there's clever people in these businesses, but I think it's because you're trying to work it out again across the chain. Brokers have a different view of it, maybe less interest, and that has been true in the past, to take on these technologies. Insurers might say, well, there's good cost savings. And, you see it all the time, which is, I spoke to someone this week, a technology provider, saying, well, we have all these tools, and we have brokers, for example, have tools that should enable them to scan all the risks they're placing, and analyze them via a kind of spreadsheety thing and then look at what's going on. But they don't do that. They don't use our system quite often. They just go and ring their insurance mate and say, can you place this risk? They do, they do it in the traditional way because that's what they can do. And this technology provider was saying it's quite frustrating because there's all these things that you can see logically do work, but they don't get adopted. So I think the whole thing's really still needs a lot of thinking through, really. And we'll hear from Paolo in a minute, because I think he's, not trying to spoil what he's going to say, but I do think he talks a bit about why, where and how AI, for example, will fit, and where it really perhaps at the moment isn't even something you need to think about.
Yeah.
Do you know what I mean? And I think that's probably where it's what this technology can do, given the culture, given the history, given the lack of certainty of strategy and what's going on in this market. You kind of can't see technology taking over. You just see it. But we have an absolute imperative, or the industry does, to reduce cost. It's way too high, and increase innovation. And I think if the two go hand in hand, I think, in a sense, once you get automation.
So that's a good point, which to kind of bring in the part two of our interview with Paolo. So let's pick this up, and we are talking about innovation, as you were just talking, and you're kind of posing a question, Ben, around how this technology might be used to give a fuller picture of a risk. So let's pick it up, and then we'll come back.
The other area I think as well, which doesn't get talked about so much in insurance, is product, is kind of new product development and packaging and things like that, which I can see is a laborious part of any business, but and actually is a real deficiency in insurance, which is explaining the product. I think it's a half decent product, insurance generally. But often not communicated very well. But it's such an effort to communicate it all. But now the tools that are available for multiplying up at a kind of industrial level the explanation of what your cyber policy does or whatever, I think that's a fantastic opportunity for AI as well.
If you're a large organisation with several risk managers talking to brokers to work out what you want, that is a very effective process. What the industry does very well, clearly, as you become smaller as a commercial consumer of insurance, or you go down to a personal lines level, you're very rarely going to have a human-to-human interaction.
Yeah.
And if you can take the AI with all the knowledge it's built to say, right, I as the AI understand your profile, you want X, Y, and Z, and that helps fill the gaps. Yeah. And so, we ought to be in a place not that far out where the challenge of the people not being insured for what they presume they were, etc., will essentially go away. Because the AI type technology at effectively zero marginal cost will be able to spot that, and will be able to say to the buyer, whether it's personal lines or SME, you would want that product to fill that protection gap. Now, you don't have to buy it, but if you're not buying it, you're at least aware that if you do X or if you do Y, then you're not covered. Yeah. And I think that's if we're sitting here in 5 or 10 years time looking back, that's going to be something that's just naturally happened, and taken the industry to a place where a lot of that frustration where actually something isn't covered has just gone away.
So if we just take an example on that, so obviously I've talked about this before, and so have others, but we all buy these insurances separately as separate products. But I live in a house with my family. It seems to me that I don't particularly like buying insurance even off aggregators, but it seems to me that, or this is a question, now we should be on the cusp of saying, I'll just profile you, Ben, and your family, and these are the product recommendations we make, and you can just press the button and buy them, and so it becomes complete kind of hassle-free but trustworthy. Is that kind of where we're getting to, or is it still going to be very much individual products sold by?
I think that's almost a different question in terms of what do you want to do both as a consumer? Do you want to trust a single supplier of all your insurance, or do you actually like, as you say, no one likes buying it, but you want to stay diversified. But I think, again, it comes down to risk transfer. It comes down to the fact that insurance companies are profit-making organisations. No one wants to, offer you for £500 an everything insurance package.
No.
Because almost by definition, if we understand your need for car insurance, for home insurance, for your gadget insurance, we can do that, and we can price that, and yes, we can probably price it more accurately if we know more about Ben. But what we don't want to do is then take all the risk on as an insurance company to cover everything else. Let's say you happen to love climbing big tall trees. Frankly, if that's not covered as a part of a standard insurance product you're already buying, it shouldn't be sort of thrown in for free just to make your life easier. So I think it's less about that. What you are seeing if we take the SME side more than the personal line side, is you're seeing now technology that's plugging straight into the accounting system, the inventory system, the HR system of SMEs, and saying, oh right, you now have an extra 20 people, therefore your premium's going to go up by Y.
Triggers.
Or you've now opened another office. And what that's doing is it's removing the need for human-to-human interaction, therefore it's reducing cost and things like that. So I think we'll absolutely see that more of that seamlessness, but I think that's different to some sort of everything package, which comes with, frankly, typically too much risk.
No, I mean, I think your point's really well made about that. And obviously with underinsurance and things like that, and property values and all the stuff we've had around cladding and things like that, you can really see its application, because a lot of it is just about record keeping, isn't it? And finding that the value you set wasn't the right value, therefore you create a huge amount of friction when you're saying, oh God, we got the wrong value in at the beginning, and now there's a claim, and and so on. It's very interesting.
So, Paolo, I was going to move on to kind of what your what's occupying your thoughts at the moment, I suppose. And I'm going to kind of flip to the other side of AI, away from the opportunities to more of kind of the risk side of things. There's quite a lot of talk about hallucinations and understanding actually what's happening in a black box. Have you got any thoughts around that side of things?
So I think that's a fascinating area, Jeremy, where it's it's all changing fast. My personal view is the term hallucination will go away in 2 or 3 years. It is a byproduct of us being in those very early days, and for maybe those people who have sort of heard it but aren't entirely clear, it is a function of these early large language models we're using. They are optimized to give an interesting sort of satisfying answer to the user, not to be correct. So if you ask it something particularly specific that it doesn't know as a fact, because remember these aren't databases full of facts, then it can create what sounds like a very compelling answer that's just frankly wrong. And there's been plenty of examples over the last year or so of how that has been caused real problems for people and companies. That I think, as we get more sophisticated around AI, is going to change in a number of ways. One is the way the models are used, or models are built, will change and get more sophisticated, the way they will be used by individuals. But also you're going to essentially start to move into a world, I think, of AI that's sort of checking AI. And so you can right now we sort of think of a single large language model doing a bunch of things, but there's plenty of examples out there now of what organizations are trying to do, which is to create multiple machines, so to speak, that are all optimized around different things, and then they work in a collaborative sort of combative way to get the right answer. So one example that I've seen running live is from a cross-sell point of view. The machine's job was just to optimize the ability of the bank to cross-sell to its customers. But then they also had a compliance machine, and the job of the compliance machine was to say, well, hang on, you can't use that phrase, you can't do this, you can't do that. So instead of trying to make a machine that was really good at cross-sell within the constraints of the compliance, it said, we're going to make a cross-sale machine that's incredible, and we're going to make a compliance machine that's rock solid. And they're going to work together to come up with something that's going to be excellent at cross-selling without doing something inappropriate. And I think we're going to see more and more of that. One phrase that I'm increasingly hearing that's interesting is this concept of sociopathic intelligence. And this sort of relates to the idea that if you're trying to get a machine to do a particular job, there's a risk that it gets so focused on doing that it'll just sort of go for it. And this sort of thing sounds like a thought experiment maybe from a few years back, but we're in a time and place now where these machines are starting to take more important decisions, more important roles in processes, where it becomes pertinent. Because what you have to remember, so much of what we do as individuals and human beings is related to our cultural norms and what we've learned. You're not taught typically, unless you're a very misbehaving 5-year-old, you're not taught don't punch someone on the nose. You just pick that up as part of growing up. And where a machine has been trained to be excellent at task X, but has no awareness of what's going on around it, there's a risk that that sort of sociopathic focus will be great for what it needs to do, but if it hasn't got the right things around it. And so I think if you're a technologist in 2025 think, right, I've got to try and give some returns to my boss on what we're doing with AI, you're going to be, increasingly challenged by various people to say, are you thinking about that, that underlying sort of ethical side, sort of moral codes and things, which is a tricky one, because, it's already hard enough to build a business case, as it is, without someone then saying, we've got to build in sort of these guardrails from the beginning.
And that's also a kind of psychological debate, isn't it, about whether we as humans are kind of changing to become, kind of more that kind of sociopathic ourselves, because we're literally following these kind of models by being on and, integrating with technology so much, that you lose that humans lose that context as well. They lose that ability to kind of judge things, if you like.
They do, but what we're very good at as communities is challenging each other.
Yeah.
So, if Ben's becoming a bit too much like that, then Jeremy's at some point is going to call him on it, probably and hopefully before it becomes a problem.
Already that, by the way.
This morning.
The question is, who's calling the machine, so to speak, in terms of that behaviour. And one of the other, I think, challenges, or not challenges, one of the discussion topics of 2025 and beyond is this sort of this unlearning. So, if the machine has learnt incorrectly, what can you do about that? So if Ben has learn to facts incorrectly or learn to cultural norm incorrectly, it's relatively easy for Jeremy to, after a few times of pointing out, say, look, you just shouldn't do that. Yeah. And as humans, we're pretty good at taking that on board and react to it. We're very good. We're at a point where we're doing an incredible job of training machines, but actually, if they're incorrectly trained because there was an issue with the training data, or because there's some inherent bias because of what they were shown or what they picked up, this concept of them unlearning certain things is going to be tricky, non-trivial, potentially expensive. And again, we're going to sort of see some dilemmas where it's like, okay, this machine is pretty good at doing these tasks, but it has these sort of issues with it. How do we manage that in the most cost-effective manner?
Yeah, which is, and that's central to insurance, isn't it? Because those decisions are often kind of almost ethical decisions that you take around claims, for example. There's a lot of talk now about empathy and how you build empathy into your claims service, for example, and it's really interesting.
That's why I'm pleased that insurance isn't the cutting edge of this.
Yeah.
Because ultimately for boring technological reasons, for just sort of stylistic reasons, and of course because of a sophisticated regulator keeping an eye on things, we are still going to, for several years, be in a place where this is sort of augmented human decision making, rather than the machines taking over.
Yeah.
And so that's why, again, I like this digital Sherpa idea, where we're saying, right, it's the human being who's still doing what he or she does well as an experienced human being, but augmented by the machine offering them additional thoughts. Because yes, between empathy, moral codes, etc., you want the human still at the heart of decision making as much as possible.
Yeah. Just to finish off, Paolo, I wanted to kind of look ahead. We always have conversations that are what's over the horizon, what should we be thinking about in the next perhaps 3 to 5 years, and I wonder if you had any thoughts around that for us.
It's very interesting, right? If we'd been sitting here a couple of years ago, we'd have sort of been mumbling about AI, but I don't think until ChatGPT came along in, what was it now, November of 22, whenever it was, and started making people realise the breadth and depth of change, the fact that this was not technology replacing blue collar workers, this was technology replacing white collar workers. I don't think we saw the extent and speed of that AI driven change. Now, my sense is, notwithstanding all these things we've said about the challenges of scaling and stuff, I think that we're almost all underestimating the breadth and speed and impact of what AI is going to do. Both in terms of changing the way we work, but of course, in terms of its use as a malicious tool and stuff. So I think, there is, anyone who says, oh yeah, it's just one of many things, I think is missing the scale and the extent that it's gonna change everything. But not just harping on about that. I think, insurance has to grapple with an increasingly volatile world, And back to what we've been saying for 10 or so years now, as we've been getting more and more data in, we're getting more and more data in, more and more insight, but we're still inherently writing 12-month policies based on a relatively modest amount of input data. And I think we have seen so many successes over the last 5 or so years about using more data, about using it better, about getting more insights, about trying to prevent claims rather than just react to claims. And I think that it would be a shame if the momentum of that in any way slowed down. If our ability to move to more parametric products where that's the right answer for people, where the ability to use the nigh on infinite amounts of data that are now available to help on the risk management side, I really feel that notwithstanding the fact that however much data you've got, if a hurricane hits your building, it may well fall down. The insight that we can get in terms of what angle to build your roofs, or as we're seeing in LA now, we're going to have to rebuild 10, 20, 50,000 structures. Which ones haven't burnt down? Right, how can you define building codes to do that? That is something that is of such relevance to the insurance industry, not just to the local planners or local builders.
Fascinating.
Good. Right. Thank you ever so much for coming in and talking to us, Paolo. Great discussion as always. And we'll catch up later in the year perhaps. And
see what's coming true and all of the things that we've failed to predict.
Exactly. As always, we don't know the future.
Indeed.
It's good to have a go at it, isn't it?
Yeah.
Thanks
very
Jeremy.
much.
Thank you, Ben.
So always good to talk to Paolo. He's kind of very grounded. He's not kind of a tech what would you call it? Evangelist. He's kind of grounded.
He's real. He's real world. I think he sees what it can and can't do, and that's the good thing about listening to people like Paolo is it's kind of sensible.
Yeah, definitely. And the stuff that he's talking around the guardrails and governance, I think that is becoming such a big issue, I think, within organizations. And certainly at the conference a couple of weeks ago, everyone was talking about using AI, but really in that kind of operational efficiency, don't have it in your claims department making decisions on claims, or don't try and put it right now in kind of the customer facing stuff. Use it to take out or try and remove some of those kind of frictional costs that we've got in the operating model. Which is kind of safer place to start, but obviously also rather the most logical. Like you were saying before we heard the interview, that is where we need to kind of focus. Taking costs out of the industry, and that's I think where the biggest opportunities.
And there's quite a lot of work to do in there as well. And so first of all, I think Paolo's point is sensible and grounded, as you say, and I don't think he's willing or able to stretch into the world that some people imagine in a kind of hyped up view of what it could all be. Now, there's nothing wrong with thinking about the future and where it all is, but we're not there now, and I would agree with Paolo on that. We've got, we've just talked about all the challenges that everybody has day to day, so it's a bit daft to think we're going to be in some kind of AI nirvana or AI hell in the future when we don't have any idea what it's going to do or not do. It's moving fast. That's what he does also say, but he's also saying it's not moving necessarily as fast as you think. It's kind of more of the same, more AI. He's less surprised by AI than the rest of the world seems to be, which it seems to have crept out of the cupboard without anybody knowing. Whereas actually, I think probably people like Paolo have seen the incremental development of things like this, and it's ratcheted up because of spend, right? And it's become popular. We talked about that. So anyway, that's all, I think that's all very sensible. I was just looking, there was an article this week about Linklaters has done an experiment on their contracts, looking at AI, looking at their contracts, and they did the same thing 2 years ago, and I think they got scores of something like 6.4 out of 10 or something, anyway, roughly that. And this time around, they got scores like 8.2 or things. So in other words, it's got quite a lot better, but it's not perfect in terms of evaluating all sorts of different types of contracts. Now, I suppose the caveat is that this is lawyers who may well be seen to be turkeys voting for Christmas if they say you don't need lawyers anymore. So guess what? The shocker, the conclusion is that you still need lawyers and experts to look at this. But let's let's take it at face value. I do probably think they're being honest as they can be, which is to say that these LLMs are not really things you can fundamentally trust, even with relatively straightforward legal contracts. They just are helping you to whiz through a lot of stuff, and therefore you've got to have people with reviewing and editing and checking skills to do all of that. So that's maybe a new thing and a big thing that's going to develop. So I think even in the space of getting rid of the drudge work, there's a lot of thinking and working out to do as to where you apply it and where you don't apply it. So what am I thinking? What I'm thinking is it's great to go to TinTech and listen to all the big talk about what's going to happen and all the things. That's brilliant, and that's what conferences should do. But you come home from that, if you're in that sort of world, and you go, well, how do I actually implement something that really, really works tomorrow for this team? And that's quite hard yards, I think, still.
Yeah.
And I guess I'm looking at things, and we're all looking at things, and I have to say that I think it's not as easy as it first looks. It's very seductive, AI, but it's not as simple as it first looks. You've really got to think about what you're doing with your data as well, because chucking all your data, like a business like mine, into ChatGPT is not necessarily a good idea. For lots of reasons. It might get misused. It might get used by Mr. Altman to make more money, even more money. And so you start thinking, well, I'll do it. We'll have our own LLM to do it. And that's then not as good, particularly necessarily in terms of its slickness as OpenAI. But OpenAI is like a sales tool for AI, right?
Yeah.
Isn't it? I mean, it's like a sales tool for AI. It's a brilliant sales tool, but it just kind of goes, hey, look, you can just put in any old sentence here and it comes out with some reasonably good stuff, which feels good. But it is a bit of a sugar high, because when you really get into we're doing stuff, what is it actually going to do? And what are we going to produce? And does it do this? You've got to produce something that's commercially viable, I suppose. And it's not as easy as it looks, as ever, so yeah.
Good. So thank you very much to Paolo for taking part in the interview. And we've got some more coming up, haven't we, Ben? So we'll be releasing those over the coming.
Yes, we've got Caroline Bedford for me, Eddie, talking about talent. And that's a good one. And we've got Simon Laird from RPC, haven't we, talking about the kind of broadly legal regulatory issues upcoming and so on. Yeah.
Yeah, indeed. Good. Okay, excellent. So let's wrap things up. Ben, what are you doing this weekend? Anything good?
Oh, I'm home alone because my wife has gone to Paris.
Oh,
yes, not with her lover, but with my daughter. So they're having a nice week, and her mother-in-law, my mother-in-law, her mother, my mother-in-law. So they're having a lovely time in Paris.
excellent.
And I'm here, so I'm just going to be I've got a few bits and pieces to do, but I'm going to take the time, quiet time.
Good. Well, last week, as I mentioned, I went to Anglesey, and on Monday I went up Snowdon, because the last time I tried to go up Snowdon, I couldn't get up there. It was so windy. And this is a picture of Snowdon. A lot of people up there, surprisingly. A lot of people. That was great. So that means this weekend I'm doing nothing, because it was hard work. It's a long way.
It's a long way up there.
It's good when you get up
quite
there.
Dangerous, isn't it? Bits of it are quite dangerous up there.
Yeah, we did
all mountains, but there are some quite dangerous bits on Snowdon.
Yeah, there are. Yeah, so there's kind of danger zone. It tells you where you are, and because it had snow on it, it was a bit hair and scarum. Like when Ben got down, my son, not you. He was going, oh, it's a bit scary, that bit. I was like, yeah, it was, wasn't it? But we didn't do Crib Gok or any of the mad stuff. But it was good.
Yes, I did it a few years ago, and very brief story. It got very foggy. Luckily, we were with somebody who knew exactly the way and was experienced. But we met some people up there who definitely weren't, and they were in thick fog. And he said it's really lucky because they were and literally we came upon it. They were probably about 50 yards away from a sheer precipice base, sheer drop.
Yeah.
So you got no wonder there's a lot of that. There's accidents. But if they put signs up, then it's fine.
Yeah.
Danger signs. Danger.
Do not walk any further. Yeah, indeed.
Yeah.
All right. Good.
Well done.
Excellent. Thanks everyone for tuning in. We will see you next week. Have a good weekend.
Weekend. Bye.
Bye.